Okay, so today we are going to go back in time. The news I'm going to show you is from yesterday, so it's 22nd of October 2019, and then we're going to go back to the 2nd of September 2019, which would be exactly 1 month and 20 days back. So without further ado, this is today or yesterday's news.
Fleeing the chaos in Hong Kong, the cashed-up buyers making Australia a top destination for real estate.
Okay, so that was the news from exactly last night, yesterday, 22nd of October 2019. Okay, so this was September 2nd, 2019, again, a month and 20 days ago. Why my video? Why are collapsing hovels selling for $2 million? It all makes sense now. Another eye-opener.
First tonight, back-to-back rate cuts and a lack of stock on the market have seen a strong surge in home prices in Sydney and Melbourne, signalling the end of that very short housing correction. While analysts are calling the bottom, they're also cautioning we may not be seeing the beginning of a fresh boom just yet. Nationally, capital city house prices rose close to 1% in August. That was really all down to Sydney and Melbourne, which rose 1.6 and 1.4% respectively.
Then I went on to say, okay, so why is this the case? Why have prices recovered in August 2019? Because I am sure we'll be referring back to this video in about 12 months' time. Looks like we are referring to this video much sooner than 12 months' time. We are referring to it once again exactly 1 month and 20 days later. Then I went on to say this. It is a speculation, fear of missing out, and desperate money. What's the desperate money? Desperate money coming from not so much China, but we've got the new contender, a new competitor, Hong Kong. Have you seen the latest news? How the Hong Kong is slowly slipping into the complete chaos with Chinese police and the army just about to enter and take over? Because any fundamental analysis of the property would tell you that you wouldn't want to be buying these things. Like there's an example. Here's an article that says that a rundown property at Rozelle in Sydney has sold for $2.01 million. So 50 days ago, I say desperate money. What's the desperate money? Desperate money coming from not so much China, but we've got the new contender, a new competitor, Hong Kong. And now our taxpayer-funded mainstream news, in this case the business, says this.
Fleeing the chaos in Hong Kong, the cashed-up buyers making Australia a top destination for real estate.
I hate to say this, but I told you so. So what's the takeaway for all this? The takeaway is that fundamentally and even in charting terms, no local people, for most part, will be buying into this market. It is the fleeing money, and only few locals that are feeling that fear of missing out, and or are fortunate to have a lot of money in their pocket to spend on this crazy market. It is the Hong Kong money fleeing Chinese invasion, really. And by the way, I may sound like I am against China or the current situation. I am just stating the result of it, meaning that the China is at the border type thing and they're looking to take back the control of Hong Kong and obviously the wealth of Hong Kong, including business and real estate. So the rich families are simply trying to protect their capital, and that's exactly what I would do. And by the way, I'm going to show you where this property exactly is. It's not too far away from my place. It's down by the water, which I regularly visit by jogging down to that exact spot at, well, I'll give it away a little bit, Carrabba Park, and then I'll jog back up to my place, but I know exactly where it is. It's beautiful. Is it $20 million beautiful? I'm not sure about that, but we'll talk about that later.
But first, in another sign that the housing market has bottomed, Australia's largest listed developer, Stockland, says residential sales have just seen a strong rebound. Stockland shares jumped 6.5% to a 2.5-year high on the update. A pullback in construction, thanks to banks tightening credit, has helped funnel demand. I spoke with CEO Mike Stannard at the company's AGM.
Now we have had Mark before being interviewed by the business not that long ago, and there was a lot of some viewers noticed it in the comments that there was a lot of blinking going on, especially when asked questions about the future of the property market. Nonetheless, a good day for Stockland because their shares gone up because of the above mentioned things. This is the trading stock market, so they'll go up and down, but it's not necessarily a reflection of what's going on in the um, property market and where it's going. Traders just want to make money today, tomorrow, this week, maybe this month, and that's maybe this quarter, and that's all they care about. What happens after that, they really don't care. That's how trading works. So it was the blinking last time. Let's have a look this time.
Mark Steiner, you've signalled today that the housing market you think has reached the trough or the bottom. Why?
Well, we've got all markets now at 3% or lower vacancies, and we continue to see population growth. Interest rates are low, and commencements have collapsed. And with banks not really extending lending to mid-tier developers, and you've seen off-the-plan sales for apartments decline off the back of some of the building quality issues. On that basis, the equilibrium today, we believe over the next 12 months will move to an undersupply. That will drive sales volumes and will also drive prices in our view.
Look, fair enough. That's the prediction. And again, you can use any data points, any argument to argue for or against prices going up or down. I don't blame him. A man's got to run the business, so be it. Good on him. Now back to the Hong Kong story.
Months of pro-democracy protests have rocked Hong Kong and led many to look to flee. There's been a surge in interest in Australian real estate, not just with wealthy elites, but ordinary Hong Kongers looking to buy more affordable homes. Searches on realestate.com from Hong Kong have jumped by a third, with Sydney, Melbourne and Adelaide at the top of the list. Sue Lannon reports.
Another weekend of protests and more chaos. Police sprayed tear gas and water cannons, while protesters threw petrol bombs and trash shops.
Now imagine where you live, Sydney for me. Say you're in Melbourne or Perth or Adelaide or one of those beautiful cities, and you see something like this on the streets. What will you think? What do you think would happen to your property value, your business value? What would you want to try and do with your property and your business? And then think that you are living in the most expensive real estate market in the world, in this case being Hong Kong, meaning that whatever you get for your existing property there will buy you a lot more almost anywhere in the world, including this beautiful Sydney that everybody wants to be in, and at the same time, in parallel, be stuck in traffic and deal with all the other issues that happen here in Sydney. Sunny days and beautiful beaches will only get you so far, as well as a beautiful looking opera house and the harbour bridge. The rest of it is just fluff, to be honest. Overrated fluff. But hey, what am I doing here? Well, job, family, everything's here. So for now, I'm here. Let me assure you, I won't be retiring here anytime in the future when that time comes.
Fueling the fire are the most unaffordable home prices in the world. More Hong Kongers are looking to escape to Australia, those lucky enough to have a second passport or qualify for a business or investor visa.
Business or investor visa. Yeah, let's not forget that many Hong Kongers, through all sorts of different channels, have Australian citizenship. So it's much easier for them to just buy our rocks and our sea, the sandy beaches and the beautiful blue sky and the ocean, and that's got to be good enough, doesn't it? This is what the migration agent has to say.
Inquiries, we've been receiving about 1,000 per month, and they're asking for different countries, and of course Australia is on the top of the list.
The political unrest in Hong Kong has seen a surge in interest in Australian properties, like this $20 million home on Sydney Harbour, from both Hong Kong buyers and returning Australian expats.
All right, I do want to show you while they're mentioning this $20 million waterfront mansion. I want to show where it is. I don't think it's breaking any confidentiality or because I just happen to know where it is. It's right on the edge of the Caraba Park. Okay, to give you some context, Sydney is a big place, so west Penrith, southwest Liverpool, then Bankstown, then you got northern beaches, you got eastern suburbs with your Bondi Beach, Vaucluse, all eastern suburbs. Then we go up Sydney across the bridge or through the tunnel, and we go up to Lower North Shore, Mosmans and Neutral Bays and Cremornes, and then we zoom into the very tip of this little Caraba Point Peninsula, and we get to our address. See, this is the Caraba Reserve or Caraba Park, and see that there. I also remember that the house next door, which is just as big of a mansion, is also for sale because it's got a big sign there at the back, but it's right there bordering the park. So that's a little private jetty there, which we can see here. So that's definitely that property. Just a little trivia, that's all.
Surging interest in Australian properties like this $20 million home on Sydney Harbour from both Hong Kong buyers and returning Australian expats. Sotheby's says they've seen a 500% increase from last year.
It's not only Hong Kong Chinese, there are just as many expats that are contacting us. One has already bought a house from us for just over $10 million, moving back to Australia.
Now, the only thing is when you call somebody an expat, what about the Hong Kong ethnic background person who's lived in Hong Kong but has Australian passport and is Australian citizen, and then they're returning? You call them expats? Well, I suppose they are technically, I think. Somebody correct me if I'm wrong, but they really are the Hong Kong people with our passport or Australian passport, and they are obviously cashed up and looking for these sort of properties. But I don't think that they will be pushing up the prices of properties that are your average 8, 9, 100,000, a million, 1.1, 2, 3 million. I think they're shooting for much higher than those figures.
Michael Pellier says the new buyers are mainly Hong Kongers who have Australian citizenship, permanent residency or millionaire investors.
Oh, gee, that's what I just said. I swear I didn't watch this before, but that had to be the case.
The last 2 months we've seen a large spike in interest from people from Hong Kong. Before it was all mainland Chinese that were coming out. Now there are just as many inquiring from Hong Kong. And obviously with the instability, a lot of people that are living in Hong Kong are thinking maybe long term it's better to move to Australia.
Yeah, I think so. That's what yours truly predicted. Once again, 1 month and 20 days ago, so roughly about 50 days ago, mainland Chinese have been replaced by Hong Kongans. I don't think there'll be that many of them numbers-wise. They'll have a lot of money, but there won't be that many of them. So that'll fizzle out eventually. And then once we hit January, February, I think the backside's going to fall out of the property market, and we'll see month after month of declines. And then the experts will be scratching their heads and saying, "Oh, maybe we haven't actually reached the bottom yet." Um, you know, you know how it is. They'll find reasons for it.
We have seen quite a notable increase in inquiries for Australian properties by 50% since the protests have started.
So this truly is a lucky country. I mean, if there isn't one group of people or a country trying to get the money as fast as possible out of their country, it's another. So welcome to the luckiest country in the world. When Hong Kong, when they run out of money to buy up our stuff, there'll be someone else. I don't know, there'll be Russia or somewhere else, or rich South Americans, or India or another Asian country. Who's next? I don't know. Comments below. Maybe Brexit. Maybe there'll be British people coming back once again.
As wealthy Hong Kongers move their assets offshore to countries that offer golden or investment visas.
Australia is quite attractive because of the weather, because of the time zone, because it's the closest Western country from Asia. But Hong Kong people has a lot of choices.
But those choices could narrow dramatically if China follows through with threats to play hardball. And that could see the trickle of emigration turn into a torrent.
Lovely stuff. What do you think our government is going to do about it? I think they'll have open arms welcoming all that cash coming in because let's not forget the stamp duties are a huge cash cow for the New South Wales governments or local governments, and then that trickles down to the rest of the economy, making this economy just one trick pony of property, beaches, and mines, while mainland China still wants to buy the dirt that we dig up and send over there. But let's hope they do. Otherwise, we'll have to innovate and lift up the productivity and do all of those good things. But until then, we are good to go and continue to be open for business.